Good morning, it's Jeffrey Christian, CPM Group. It's Friday, the 14th of October, about 11:05 in the morning. Kind of brief presentation today, just updating the markets. Gold prices are around $16.50 right now. Silver is just below $18.40 as we speak. The prices have come down very sharply over the last several days. The major cause has been interest rate expectations. Higher inflation figures released yesterday, stronger economic conditions and economic data coming out all have suggested to the financial markets that interest rates will probably be raised higher than some people had expected and the market consensus had expected. And that has been devastating for financial assets. The trend has been going on for a few weeks and it continued this week. The inflation data did come out. It was higher than some expected. There were signs continuing that there is some reduction in plateauing in prices, not necessarily, and possibly a reduction in month-to-month changes. Year over year was high, which was expected. Month-to-month was 0.4. There was weakness in the energy market, but food prices were very high. Insurance, medical insurance, and other medical services were very high. Medical insurance was up 28% year over year. Used cars were down, new cars were up, but a lot of services were showing increased costs. The inflation figures didn't push precious metals higher the way some people would have thought, because instead it focused the financial markets' attention on the idea that interest rates will be raised more strongly in November and December, move higher and stay higher longer than a financial market consensus believed or thought even a week ago. So that's really it is. It's very important to note that the selling has really been across assets, stocks, bonds, currencies. A full range of commodities have declined. Some of them recovered, but most of them are down and down from a few months ago. It's not focused on gold and silver. There's no conspiracy driving the price down. There's no slam down. It's a general reduction in the values that the markets are ascribing to financial assets. It's probably going to continue for a while. We think that prices of gold and silver could stay weak. We wouldn't be surprised to see silver spike down as low as $17.90 in the next few weeks. And gold, I think we're saying it's a possible drop down to around $16.30. We still expect prices to rise and possibly rise toward in the final 2 months of this year after the early November Federal Open Market Committee meeting, where we do expect to see interest rates rise and rise sharply. But beyond early November, we wouldn't be surprised to see the prices rise. There are some factors there that could be possible shocks on the downside. The Chinese Communist Party is meeting in Beijing starting on Sunday, I believe, of this week. And it could have a negative effect on gold and silver prices depending on what comes out of that. The U.S. election's coming up in early November, and we have the ongoing problems within Russia due to its invasion of Ukraine and the fact that that war is not going quite the way Russia had expected it to. There's also some shifting going on in the UK. The UK has suffered mightily over the last few weeks due to wrong-footed tax cuts by the new Tory government. There were some indications this morning that the Tory government might reverse some of those actions. And that could also lead to some reduction in demand for gold and silver from investors who are suffering the economic consequences of that Tory tax decision. So if you look at these risks, Most of the things that could go wrong for the world that could stimulate investment demand for gold and silver are pretty much priced into the prices already. And most of the things that could go well for the world and reduce investor concerns and thus demand for gold and silver in the short term have not been priced into the market. So we're sort of where we expected we to be. And right now, on a short-term basis, the risks of something changing market consensus views is more to the downside than the upside. That is a temporary factor in our mind. We do think that as you go forward, again, beyond early November, we think that the downside risks for the world and the upside risks for gold and silver will shift again, and you might see higher prices. That's all I have for today. We'll talk to you next week.